Officer Adda 24/7. So today we are going to have your first class, that is PPB, right? And this is your first class. So we are having this topic today, that is banker customer relationship. It is your chapter 1, right? And in this chapter we will going to understand what is the relationship between the bank and customer, right? So there are different type of relationship between the bank and customer. What kind of relationship is there? See, we have the relationship like, if any customer, right? If any customer, okay? So if any customer, suppose, okay, if any customer, he is going to uh, right, he's going to open any kind of locker, or maybe he's going to avail any kind of loan scheme, or he's going to deposit his rupees into the bank. So there will be some kind of relationship will be made between the bank and the customer. So there is a first relationship is deposit in the bank. Suppose I am the customer and I am depositing my money into the bank, right? I just have the saving account and I'm depositing my money into the bank. So here I become the bank become the debtor and I become the creditor in this case, right? And suppose second case is I am going to, right, take the loan from the bank. Now I am the borrower. Okay? Now I am the borrower and bank is the creditor in this case. Okay? I am the borrower. I am the debtor because I am taking the loan. I am taking the money from, okay? I am taking the money from the bank. So I am the, right, I am the borrower here. That is a loan from bank. Third case is what? That is a safe deposit locker. Okay? Suppose I'm going to uh, take the locker, SDV locker, that is safe deposit vault locker from the bank. Okay? So here I become the lazy and bank become the laser here. Basically I have to pay the rent. Okay? Because I'm enjoying the property of the bank. In that case I become the like lazy of that bank, right? Lazy of means I will be paying the rent actually. Okay? So it is safe deposit vault locker. Now I am keeping some safe custody, some document into the safe custody of the bank. Okay? In this case bank become the bailee and I become the bailer because that goods is belong to me, right? That goods is basically, that goods are belong to me and I become the, right, then I become the what? That is, I become the here, right, I become the bailer and bank is the bailee. In the case of issue of draft, then what will happen in this case? Issue of draft, bank will be the debtor and I will be the creditor. ठीक है ना? Because bank is issuing the draft for me, right? So the same relationship which I am having in the deposit, the same relationship here also. ठीक है? Because I am depositing the money into the bank and bank is the debtor. Bank is taking money from me and then he is issuing, then they are issuing the draft. So definitely here the relationship will be debtor and creditor. Now we have the payee of draft. Okay, that's sixth relationship. Here in the case of payee of draft, the bank will be trustee and customer will be beneficiary. Okay, so trustee is for what? Trustee is basically, trustee is what? Trustee is basically who is like your trustee. Okay, you are the beneficiary and here you are the trustee of that beneficiary. Fine. So here in that case what relationship will be there? That will be the trustee and beneficiary relationship will be there, right? So if you are having any type of doubt now, then after just explaining all these topic, okay, all these relationship, then we will have the question answer, right? This is our first chapter and after completing this chapter, then we will have the question answer from this topic, right? So, right? So now what is happening here? See, yes. So now what is happening here? See, in the case of collection of check, now what will be the relationship? It will be like agent and principal. This relationship will be formed. If you are collecting the check, then agent and principal, this relationship will be formed. In case of pledge, suppose you are just pledging your something, some item into the bank, right? Then in that case, the customer will be pledger or pawner and the bank will be pledging. Same in the case of mortgage and hypothecation also. That is mortgagee and mortgager, hypothecatee and hypothecator. Suppose in case of bank, ठीक है, bank is selling or purchasing of security on behalf of customer. That means they are acting on behalf of you. They are acting. ठीक है. Here principal is whom? That is a customer. Principal is the customer and agent is the bank because they are selling, they are dealing, right, on behalf of you. So they are your agent and you are the principal. ठीक है. If money deposited but no instruction for disposal, trustee and beneficiary again. If any article customer is left in the bank, trustee and beneficiary again. So let's see the first question here. When a bank lend money to the corporate person, the relationship is what? Tell me, what is the right answer of this first question? What is the first question? Right? What is the first question? When a bank lend money to the corporate person, then what kind of relationship will be formed here? Tell me, what is the right answer here? I'm just seeing your comment also. Please give your answer also. The first question is, if a bank lend money to the corporate person, the relationship is what? That is borrower and lender, creditor and debtor, debtor and creditor, and customer and client. Tell me, what is the right answer? See, when bank is lending the money, okay, to any person, maybe to corporate or anyone. Here basically bank, what is bank is doing? They are lending the money. Okay. So here in that case, now you are the debtor. Okay. Now what kind of relationship will be there? Tell me. If bank lend the money to the any corporate person, okay, or maybe any person, then what kind of relationship will be there? The relationship will be the same, debtor and creditor. So C is the right answer. Okay, because bank is lending you the money. Just check this slide. I'll just show you the, see, debtor and creditor. ठीक है ना? Bank is giving money. ठीक है? So here the relationship is what? That is debtor and creditor. Next question is, hybrid deposit means. What is the meaning of hybrid deposit? Tell me, what is the right answer? Hybrid deposit is what? Combination of saving bank and current deposit, combination of monthly income scheme and half yearly scheme, combination of demand and term deposit, and both B and C. Tell me, what is the right answer? See, what is the meaning of hybrid deposit? Hybrid deposit, even sometime it is also called as a flexi deposit. We called it as a even flexi deposit also. Okay. This term is usually known as a flexi deposit also. So hybrid deposit and flexi deposit both are the same word, right? Here, what is the right answer? The right answer is it is the combination of demand and term deposit. Okay? So it is the combination of demand and term deposit. Flexi deposit, we can say this, or maybe we can say this as a hybrid deposit, which having the combined feature of demand and term deposit basically. Okay? So hybrid deposit is what? Hybrid deposit is the combination of, right? Hybrid deposit is the combination of demand deposit and, okay, and the term deposit. So that is having the concept of insured deposit and uninsured deposit. Okay, we can say it as like insured deposit. Okay, that is, suppose it is the combination of insured deposit plus uninsured deposit. Even we can say it like that also, uninsured and insured. So this is the combination of demand and term deposit. The next is a draft purchase is reported lost. Suppose one draft is purchased and that is reported lost, and the purchaser, they want to stop the payment of the draft. Can the bank do it? Option 1 is bank can stop the payment since covered under the negotiable instrument. Bank cannot stop the payment since it is a promissory note. Bank would issue stop payment instruction only after 2 weeks from the date of issue, or none of the above. बताइए, what is the right answer in that case? What is the right answer? Hybrid deposit that we have done, it is a combination of term deposit and demand deposit. Now, if suppose any draft, ठीक है ना, bank has issued any draft and which is lost by the pay, ठीक है, so what that pay will do, he will immediately send a letter to the bank informing the same. Then bank will not his caution and stop the transfer. So what will be the right answer in that case? What is the right answer? Basically they will send the caution letter. ठीक है, they will send the caution letter. ठीक है, so A is the right answer. Next is bailor bailee relationship is applicable in. What is the right answer here? Check. What is the right answer here? Tell me. Right? The question is, what is the right question? The question is bailor and bailee relationship is applicable in keeping the article in safe custody with the bank, ठीक है, demand draft issued by the bank, safe deposit locker, or cash deposited with cashier by the customer. Tell me what is the right answer. What will be the right answer in this case? ठीक है, so have you understood what is a hybrid deposit? That is a combination of demand deposit and time deposit, hybrid deposit. See, demand deposit is what na? That is payable on demand. Okay? Low interest rate is there. Time deposit is what? It will be repaid after the expiry of deposit period. I'll just explain you once again what is a hybrid deposit. First, just tell me what is the answer of bailor and Billy relationship. See, bailor and Bailey, if the safe custody will be there. Okay? So answer is what? That is keeping article in safe custody with the bank. A is the right answer. Now tell me a credit voucher of rupees 49,000 favoring Swati was wrongly posted to Abhinav by the bank. The relationship established with Abhinav is what? Creditor, indemnifier, creditor, debtor, debtor and guarantor, or trustee and beneficiary. Tell me what will be the right answer. Then I will explain you hybrid deposit once again. ठीक है ना? We will explain what is the right answer. ठीक है? Here what is the question? A credit voucher for rupees 49,000 favoring Swati was wrongly posted to Abhinav by the bank. ठीक है? Now what kind of relationship is there? Tell me what is the right answer. That is option A is what? C. ठीक है? Here the answer is creditor and debtor. What kind of relationship will be there? That is creditor and debtor. ठीक है? This type of relationship will be built. Creditor and debtor. Because the 49,000 which is the credit voucher for Swati and wrongly posted to the Abhinav. Right? So at the what kind of relationship will be there? That is a one is creditor. ठीक है? Bank is creditor and Abhinav is the debtor. Right? Now the next question is, which type of account is suitable for those who can save regularly and expect to earn a fair return on the deposit over a period of time? It is FD, regular deposit, recurring deposit, or investment deposit account. Tell me which type of account is suitable for those who can, right? Who can save regularly and expect to earn a fair return on the deposit. So what will be suggest to them? If they can save regularly, they want to save regularly, of course it is the recurring deposit account, RD account. ठीक है ना? It is RD account because they want to save regularly in every month. ठीक है? And they will have the fair return over a long period of time, over a period of time basically. Seventh question is, a merchant bank is financial institution conducting money market activity and which of the following? See, merchant bank is basically they are into the lending, they are into the underwriting, they are into the investment services. So all of the above of course is the right answer. Now I'll just explain you what is the difference between the demand deposit, right, and time deposit. See, hybrid deposit is the combination of demand and time. So what is a demand deposit? It is payable on demand. Low interest will be there and sometime even no interest. It is like your OD account, your current account, your saving account, or maybe any unclaimed deposit. Interest will be paid on the half yearly basis. But time deposit is what? That is your FD. ठीक है? Expiry of the deposit period, you will be getting the amount. High interest rate is there according to the period, and even time deposit you can have from 7 days to 120 month also, with or without reinvestment plan, and interest will be paid on a quarterly basis, not half yearly, even quarterly basis. Okay, so that is the benefit of time deposit. That is the even biggest benefit of the time deposit.
Good morning, everyone. Welcome to the official YouTube channel of Officer Study 24/7. So, before starting the session, first let me know, is audio video both are okay? Are we good to go? And also, welcome to the channel. And as you know, we are discussing the Achiever series in which we are talking about each and every unit of your modules. And we have started this series with the module A, in which we have completed the module A in around 15 to 16 classes of yours, and after that we have already started your module B sessions, and today itself we are having the module B session about your principles and practices of banking. And yeah, apart from that, if we talk about the principles and practices of banking, as you know, we have total 4 modules, and now we have total 4 modules in PPB. And when it comes to the total number of units, we have 55 units in PPB. So in 4 modules, we have 55 units. That's a huge syllabus, and that's why we are trying to cover that every day 1 unit in a very easiest way, so that you will be understanding what actually the whole syllabus is. When you will be done with 1 unit every day, you will know like how much you have to study and what you have to study in your paper, because there is 1000 pages book we have for PPB. A lot of content is there, a lot of theory is there, numericals are also there. That's why it is important for us to cover each topic day by day. So in today's session, as you can see, this is our class number 3rd of module B. It means we have already done 15 to 16 classes in module A, and we have started module B, and this is the 3rd class of module B. So in the 3rd class of module B, the topic we will be talking about, that is operational aspect of loan accounts. This is your unit number 24, and the overall class we are talking about is class number 3 of module B. Okay, so 1 to 55 units we have. So this unit is your 24th unit of module B. And if we talk about the number of classes, we are having today the 3rd number class of PPB, module B. Okay, so now we are going to talk about operational aspect of the loan account, like the how interest rate will be charged, what documents have to be given, on the basis of risk category, how to be decided that after how many years you have to do the documentation again, what is the risk category, etc. That's what this chapter is talking about. Okay, so let's start with the first question, and the first question is talking about here in the form of questions. We will be discussing each and every aspect of your topic, that is operational aspect of loan account. First is talking about that for educational loan of 3 lakh rupees, for educational loan of 3 lakh, the margin amount required is dash 30,000, 45,000, 15,000 on nil in case of your loan account. And what type of loan account we are talking about? We are talking about your educational loan. So in educational loan of rupees 3 lakh, how much amount should be there as the margin? A, B, C or D? Margin money required is actually your none of these. It means nil. It will be the right answer. For educational loan of 3 lakh, margin amount required is nil. None of these amount is required, or nil amount is required to have the 3 lakh rupees educational loan. The first condition. Okay. Now, second question is asking about if the loan if the loan covenants are not observed by the borrower, it is called dash. So we are talking about like if the loan covenants have not been observed by whom? By the borrower, the person who is taking the loan, he has not checked the covenants, then in this situation, this loan is called what? Let me know which of the following is correct. It's a kind of a loan agreement, you can call it. A legal document with the certain terms and conditions. If that not have been checked by the borrower, then it is called what? Sorry. A violation, an event of default, a breach, a non-compliance. A, B, C or D? So simply we are saying that your borrower, the person who is taking loan, the person who is a person who is taking credit from the bank, have not checked the loan agreement, not observed the loan agreement by the borrower. That's an event of default. It is called what? It is called an event of default. Okay, so right answer will be your B. So if the loan covenants are not observed by the borrower, it is called an event of default. Next, frequency of loan review depends on the dash. Like if you have taken the loan, then the frequency of your reviewing of loan, it depends on which of the following. First, the loan amount. Second, the activity of the borrower. Third, the constitution of the borrower and risk level of the account. So whenever we means the bank is providing loan. Whenever bank is providing loan to the customer, so very obvious the certain things have to be checked. Bank first go to the CIBIL, that is Credit Information Bureau of India Limited. It provides the credit score. It provides what? It provides the credit score to the bank, and on the basis of that credit score, bank will be giving loan to the customer. And this is a 3-digit credit score. And when we talk about your CIBIL, CIBIL is your credit information company that is providing credit scoring to the individual customer as well as the commercial customer. So it's a 3-digit score between 300 to 900. The scoring will be provided, and after seeing that scoring, the bank will decide we should give loan to this customer or not. Okay, this is very basic of your criteria of providing loan. Now this rating, or I can say this credit score, it depends on your credit worthiness. It depends on your loan account as well as your credit card repayment. Like CIBIL, first check your, like if you have taken any loan from the any bank or financial institution, if you have done, have you returned that loan on time or not, that will be checked. And if you have taken the credit card, have you returned the credit card amount on time or not. These two things have to be checked, and after checking these two things, you will be able to give the credit score to the customer, and on the basis of that, bank is providing loan. It means when you are actually providing loan, you are again checking this customer is defaulter or not, customer is fraud or not. So it means when after giving loan, you have to review the loan. It will depend on the risk level of the account. Like how much risk and customer or a customer can occur in the bank for you. On the basis of that, you will decide that this loan will be reviewed when and where. So your right answer will be D answer. That is risk level of the account. So option number D will be correct here. Okay, the frequency of loan review depends on what? The risk level of the account. Next question. RBI has not prescribed prudential ceiling for exposure of banks to dash, to vehicle loans, to NBFCs, to capital market, to real estate. RBI has not prescribed the prudential ceiling for exposure of banks to which of the following? A, B, C or D? And the right answer, not prescribed the prudential ceiling for exposure of banks to which type of loan? To the vehicle loan. So right answer will be your A option. So RBI has not prescribed the prudential ceiling limit for the exposure of banks to the vehicle loan. So right answer will be your A option. Okay, right answer we have is A option. Next question. Who determines the MCLR? Now, what is MCLR first of all? Who determines the MCLR? Ministry of Finance, RBI, bank themselves or NABARD? So, MCLR is marginal cost of fund based lending rate. That's the rate of interest that banks charge from the public when they are providing loan to the public. So, what used to happen? Earlier we used to have prime lending rate that used to be charged from bank to by bank from the customer. And this prime lending rate have been changed into benchmark prime lending rate. Then this benchmark prime lending rate have been converted into your base rate. Then this base rate have been converted to MCLR, or I can say these have been replaced by each other. And this MCLR was also replaced by repo linked lending rate, that first time introduced by SBI, State Bank of India. So with the repo, we have linked the lending rate of the commercial banks. So you can see prime lending rate, benchmark prime lending rate, base rate, marginal cost of fund based lending rate, or repo linked lending rate. These are the rate of interest that's charged by a commercial bank. This is the rate that's charged by commercial banks when they provide loan to whom? To public. So the rate of interest public is giving on a loan to the commercial bank was these types of rate of loans. Okay, and marginal cost of fund based lending rate is actually determined by banks themselves. So they have been given the certain components in the MCLR that have to be calculated at the individual bank level, like their costing, their assets, their revenue, their profits. All these have to be identified, all these have to be taken care of, and accordingly you will decide what will be your MCLR. So individual bank by themselves determine their MCLR rate after calculating their business aspects. Okay, so your right answer will be C, that is bank themselves. And do remember that the first rate we used to be charged was prime lending rate, then benchmark prime lending rate, then base rate, then MCLR, and now we are focusing on repo linked lending rate. So right answer here is C. Okay, next question we have here, like as of July 2012, which of the following categories of loan could be priced without the reference to base rate? Now, there is a certain question about when it have been changed, like as of July 2012. So, which of the following categories of loan could be priced without the reference of your base rate? First, DRI advances. Second, loans to banks' own employees including retired employees. Loan to banks depositor against their own deposit. Loans where interest rate subvention was available, and loans where refinance is availed. So out of these category you have to answer like which category of loan could be priced without the reference of your base rate. Like base rate used to be a rate of interest, the minimum and the maximum rate of interest have been given. Like this is what you have to charge for all the customer. Hai, you cannot go more than the maximum rate. You cannot be lending at the less than minimum rate. That's what the base rate, like a range have been given by RBI, because what used to happen now in the prime lending rate or benchmark prime lending rate, bank as per their prime customer they used to change the rate of interest, and to replace this situation we have introduced the base rate, like a range have been given. Between that range you have to provide the you have to charge the rate of interest from the customer. And the right answer is all of the above. Right answer we have is all of the above. All of these loans category, they could be priced without the reference to the base rate as of July 2012. So right answer we have is D. Okay. Now next question we have, the MCLR shall comprises of. Now MCL I have already told you, marginal cost of fund based lending rate. It is what? It's a marginal cost of fund based lending rate. So marginal cost of fund, negative carry on account of CRR, operating cost, tenure premium, all of the above. So which of the following is the part of your MCLR by calculating which you get the actual MCLR rate to be charged on the loan accounts from your customers? So A, B, C, D or E, which of the following is correct? And the right answer here will be all of the above. The right answer here we have is all of the above. So marginal cost of funds, negative carry on account of CRR, operating cost, tenure premium, these all are the part of your MCLR. So to calculate what rate of interest to be charged on a loan account, you have to calculate the marginal cost of fund of a bank. Then you have to check the negative carry on account of CRR. What is negative carry on account of CRR? So we know what is CRR, in which all the scheduled commercial banks have to maintain a certain reserve in form of cash. The percentage of NDTL that is prescribed by RBI with RBI. So all the scheduled commercial bank have to maintain the certain reserves in form of cash with RBI as a percentage of NDTL which is prescribed by RBI only. This is CRR. And on CRR we know banks cannot earn money. Banks cannot have the income on CRR because RBI do not pay any interest to commercial bank on CRR. RBI have done so only one time in the banking slowdown of 1999. After that and before that, RBI never paid interest on the CRR amount. It means banks cannot earn on the amount of CRR, but they have to maintain the CRR reserves with RBI, and that's what the negative carry we are talking about. Like you cannot earn anything on the CRR balance. That's the negative carry on account of CRR. Okay. Then the operating cost of the bank and the tenure premium. These are the values that used for calculating like how much rate of interest have to be charged from the bank, by the bank from the customer. Okay. So right answer will be your E. All of the above. Next question we have here. It's saying the term credit management. It encompasses which of the following? So when you talk about the credit management, what actually it encompasses? First, capital adequacy norms that we have introduced in the Basel norms, okay. And the second is saying risk management including asset liability management, okay. The exposure norms, risk pricing policy and credit risk rating, asset classification, income recognition, provisioning norms, appraisal, credit decision making, loan review mechanism. So these are the certain points have been given here. Now you have to tell when it comes to the credit management, which of the following will be taken care of. Income recognition, when we are talking about, it means simply that the earning you are having, the profits you are having, that is the income recognition. And asset classification, you know, bank have certain assets, certain liability. Liabilities of bank is your deposit. Assets is the loans and advances bank is providing. And that is divided into two categories, the standard asset and non-performing asset. A standard asset further divided into two parts, that is your regular asset and stressed asset. And then the NPA will be divided into three parts, substandard asset, doubtful asset and loss asset. Okay. So these are the classification of asset. This is the asset classification you have. Income recognition means to find out how much profit you are having. What's the revenue of a bank after removing the costing and everything. Provisioning norms, these are the norms which actually after analyzing the situations we have given to the banks. Like we have analyzed everything, after that we have seen like what can be done to ignore the risk or to minimize the risk of loss in the banking system. After checking that, we have given the certain norms like this should be done. Okay, then appraisal, you all know credit decision making that the management will be take loan review mechanism, like when the review of loan should be done on the basis of what it should be done, everything is there. So these are the terms they have been given, and all of the above will be encompasses when it comes to the credit management. Okay, so the right answer will be your D, that is all of the above. Right answer is D, that is all of the above. All these will be part of the credit management. Now next question we have, the frequency of review should vary depending on the magnitude of risk, like say for high risk account dash months, for average risk accounts dash months, for low risk account dash year. So 361, 252, 571 or none of the above. What is the duration for high risk account, average risk account and the low risk account? An answer will be for high risk account it should be 3 months, for average risk account it should be 6 months and for low risk account it should be 1 year, and that's the right answer of your option A. Okay, this is the frequency of review on the basis of risk level. Okay, so do remember that this is the risk level 3, 6 months and 1 year for your high, average and low risk customer respectively. So right answer you have is A. Okay, next question we have, the operational guidelines regarding loans and advances contained in a bank's operations manual are based primarily on which of the following? Principle of credit, bank's loan policy, regulatory and legal framework. Only 2, only 1, both 1 and 3, all of the above. So the operational guidelines regarding the loans and advances that contained in a bank's operation manual, they are based on primarily on which of the following? And the right answer is on all of the above, on the principles of credit, on bank's loan policy, on regulatory and legal framework. So right answer will be your D, all of the above. Right answer is D, all of the above. Welcome to the official YouTube channel of Officer Survey 24/7. So first of all, let me know how are you all, and also let me know is audio video both are okay, are we good to go? So as you know, we are having 6 AM class in which we are discussing your PPB, principles and practices of banking, for each and every unit of you. So we have started the module B. If I talk about the PPB subject, it's the principles and practices of banking, and it's the paper 2 of your JAIIB May 2024. And when we talk about paper 2, it means after IEIFS you will get only 1 week difference for your PPB, and in the 1 week we have to cover a lot in form of revision and last minute revision, I can say, or we can say we have to do everything in 1 week, and to make it possible that in 1 week we will cover the whole PPB syllabus in form of revision and all, for that you have to study right now in very depth. It means in a very much conceptual understanding way you have to cover this particular subject, because this subject is going to be very large. We have 4 modules, 55 units are there. It means 1000 pages books is actually it is, and if 1000 pages book we have to cover, we have to start very early. So if you haven't started yet, start preparing for your JAIIB May 2024 paper. Apart from that, if I talk about your if I'm talking about your JAIIB preparation, the PPB, if you haven't seen the earlier session, we have started these series, achiever series, for all the 4 subjects of you from 4th of December, and the playlist is available on Officer Survey 24/7. So if you haven't seen the playlist yet, or if this is your first class, do make sure you check all the recordings of the sessions. It is available on the channel. Okay, so let's move forward, and today we are having the class number 5 of module B. So as I have told you, module A we have completed, and now we are continuing the module B class number 5 here. Okay, so if you haven't seen the earlier session, do check it, because all the units, all the topics, all the subtopics, everything is very much important for your JAIIB preparation. Everything have to be covered in the JAIIB preparation. Okay, so let's start. Today we have to cover the topic that is types of collateral and their characteristics. That's the module B class number 5. If I talk about the unit number, this is the unit 25th. If you talk about the overall unit, this is your unit number 25 for PPB, sorry, not IEIFS, out of 55 unit. Today we are talking about 25th unit, that's a part of your module B. And if we talk about the number of class we are having, this is the 5th class of module B. Okay, and you can say the topic name is types of collateral and their characteristics. So collateral is simply something we are talking about which you gives as a security. Collateral means something that you give as a security. If I am taking a loan It's very obvious, without taking any security, bank won't be sanctioning me the loan. So the collateral is very important. Collateral is not there only in case when you find out that there is a certain government scheme going on in which third party or collateral free guarantee loan will be given to you. So only in the government securities firm, or I can say only in case of social welfare, there is collateral free loan is available. Otherwise, in all the condition, you have to give the collateral. Okay, so let's start with the first question, that is asking about LTV ratio in case of loan against gold jewelry is dash. What should be the LTV ratio in case of your loan you are taking against the gold jewelry? So LTV actually is what? It is loan to value. It is what? It is loan to value. What should be the loan to value ratio is? So loan to value ratio is simply a financial metric. It compares the amount of loan to the value of an asset. Like your amount of loan the bank is providing to you, amount of loan, okay, when it compares the value of an asset you are giving for a security. So what amount of loan you are taking from a bank, and for that amount of loan, what value of an asset? Asset means whatever you are giving in a security. Like if you are giving gold in a security, like what's the value of your gold? When you compare these two, this is known as loan to value. And in case of gold jewelry, what should be the loan to value of your loan? 50%, 75%, 100%, 85%. So the right answer is 75%. Your loan to value ratio should be 75% if you are providing, or if bank is providing, or if you are taking loan on the gold jewelry. Okay, so right answer will be your B. Next question. Next we have loan against minor's term deposit. Now who is minor? Minor is a person who have not attained the age of 18 years yet. That person is known as minor. So after attaining the age of 18 years, you will be known as a major. Okay. So if you are taking loan against the minor's FD or the term deposit, what will be correct statement from here? First is saying can be granted if the documents are signed if the minor has completed the age of 14 years. Second, cannot be granted. It is saying can be granted. It is saying cannot be granted. So first of all, we should eliminate the answers. And if we talk about loan against the minor's term deposit, it can be granted. It is not like you cannot give on loan on that. You can give loan on that. So it means I can eliminate the B option here only. Okay, because it is starting with the cannot be provided. Okay, so B is eliminated. C is saying can be granted to the guardian of the minor if it is for the necessities of whom? Of the minor, and this is our answer. So on minor's term deposit, the term deposit you have on the name of a minor, it is allowed to provide loan on that, but only when this loan is taken by the guardian and for the purpose to fulfill the necessity of a minor. So your right answer will be C. It can be granted for the necessity of the minor. Right answer is C. Okay. Next question we have, that is talking about loans against the security of shares, debentures, public sector undertaking bonds to individual should not exceed the limit of dash per individual borrower if the securities are held in the demat form. Demat form means electronic form. If you have securities in electronic form, that is known as demat form. Apart from that, shares you all know, in which you get the ownership, you get the partnership in the company. Your profit and loss depends on the company's profit and loss because you became the partner. Okay. Now debenture is your debt instrument on which you are taking loan from the public. So you have to return within a certain specified period of time with the rate of interest. That's your debenture. And when it comes to the bonds or public sector undertaking, that is also same. If you are issuing bonds and debenture, they both are the debt instrument. They have to be returned by the company or bank or whoever is issuing the bonds and debenture within a maturity, for a fixed maturity period. After that ends, you have to return the money with the rate of interest. So now what is the amount here? It is it 10 lakh, 15 lakh, 20 lakh or 50 lakh? 10, 15, 20 and 50. So your right answer is actually 20 lakh. So loan against the security of shares, debenture, public sector undertakings, bonds to individual, it should not exceed the limit of what? 20 lakh. So your right answer will be C option. Okay, right answer we have is C. Next question. Next we have here that is talking about in terms of section 19(2) of Banking Regulation Act 1949, no banking company shall hold share in any company whether as pledgee, mortgagee or absolute owner of an amount exceeding 30% of the paid up share capital of the company or 30% of dash, whichever is less. Share held in a demat form should also be included for the purpose of determining the exposure limit. So what do you think? Which of the following is correct? So the section 19(2) of Banking Regulation Act 1949 says that the no banking company shall hold shares in any company, and that's true. You cannot, any bank, when you talk about any particular bank, no bank can take the shareholding of any company. Like bank cannot hold the share of TCS or any other company. Okay, that's the condition. And whether as pledgee or mortgagee or absolute owner, you cannot own that. Okay, of exceeding amount, that is 30%. Up to 30% you can have, more than that is not allowed, of the paid up capital of the company, or the 30% of what? Own paid up share capital and reserves, tangible net worth, risk weighted asset, paid up capital. So paid up capital already defined, 30% is allowed. It is not true. Risk, why you will have a risk weighted assets ownership? No. Tangible net worth? No. It should be own paid up share capital and reserves. Whatever your own paid up capital is, of that 30% is allowed to hold in any company. Okay. So the right answer will be A option. Right answer is A option. If you remember, it is the same, what we can call it, the same rule is there with the insurance company as well. Adda said that no insurance company can hold more than 30% share of any banking company. But in case of LIC, when it purchased the IDBI, that was the exceptional case for which Adda have given the permission to hold more than 30% shares that have been taken by LIC, 51% share of IDBI, and it was allowed for a particular period of time. After it completes that period, that is 3 years, I guess, after that the shareholding have to be reduced. And now you can see the LIC is continuously reducing its shareholding, because this is the norm, this is the condition have been given by RBI as well as Adda for insurance company. Next question. Documents of title to goods has been defined in. So the document of title to goods has defined in which particular act? Indian Contract Act, Negotiable Instrument Act, Transfer of Property Act, Sale of Goods Act. A, B, C or D. So you are talking about a document of title to goods. So obviously it will be defined where? The Sale of Goods Act. So right answer we have is D. You have a right answer is D. So Sale of Goods Act talks about the documents of title to goods. Okay, next question. Next we have the nature of charge created while advancing against LIC policy is dash. It is what? Is it assignment? Is it lien? Is it pledge? Is it set off? So these are the type of collaterals we can say, and their characteristics we are talking about here. So the nature of charge created while advancing against what? The LIC policy. When you are providing loan, when you are giving loan to the particular party by taking collateral in form of LIC policy. In that situation, it will be known as what? The assignment, lien, pledge or set off. And the answer will be, it is the assignment. It's the assignment. Okay, because set off is when you use one account to settle down your credits. That's the set off when bank do that. Pledge is simply a type of collateral in which you give movable property whose possession remains with the lender and the ownership remains with the borrower. And lien is simply which gives the right to the bank that you can have the possession of the collateral until and unless customer returns the loan. Okay, so the right answer will be assignment because you are providing LIC policy, and the right answer is A. I guess clear? Next. Which of the following are the modes of financing book debts? Which of the following are the modes of financing book debts? Factoring, forfeiting, overdraft, cash credit, hypothecation of book debts, all of the above. So, which of the following can be used to do what? To simply finance the book debts? A, B, C or D? And the right answer is all of the. By all of the, you can finance your book debts. You can have factoring, you can have forfeiting, you can have overdraft, you can have cash credit against the hypothecation of book debts. Hypothecation is what? It is also a type of collateral in which the possession and ownership both remains with the borrower. Okay. And I guess factoring and forfeiting, I have told you so many times, it's simply the immediate cash banks provide to the seller, so that he can perform the another transaction. Now, so right answer will be D, all of the above. Okay, your right answer will be D. Next question. Next we have which of the following is not a disadvantage of gold loan? Not a disadvantage. It means gold loan has its advantages as well as disadvantages. So, which of the following is not a disadvantage of your gold loan? First is saying valuation of studs, jewelry, fashion plated, coated, hollow ornaments are difficult, and this is true, right? This is actually the disadvantage. Like you feel that this is difficult to make the valuation of the gold jewelry. Testing for purity of gold without destructive test may not give precise result, and that is also true. This is also disadvantage. Until and unless you have destructive test, you won't be getting the actual value of gold. So, right answer, this is also true. This is also a disadvantage. Gold ornaments handling is risky due to likelihood of loss, theft, etc. And this is also true. When you are taking gold loan, you are providing your gold to the bank. The possession goes with the bank in that situation. It's an example of pledge. And in this situation, it is risky for the bank. What if someone have stolen this or something? This is also a disadvantage. Gold loan, it means right answer will be D. Gold can be easily stored in secured manner. This is true. This is the advantage. This is the advantage of providing gold loan. Rest were the disadvantages. So, right answer will be your D. Okay, right answer is your D. The last one is advantage, not a disadvantage. So, next question we have, which of the following statement is correct? Which of the following statement is correct? First is saying interim bills against which of the the government pays 80 to 85% of amount. Second is saying final bill for the balance of 15 to 20% that will be paid after complete verification of goods at the point of destination. Because of the delay involved in the settlement of final bills, bank should prefer the interim bill for advancing the final bill for collection. So, I can say both the statement are true. None of them is incorrect. Interim bills is actually the bill against which government pays 80 to 85% of the amount. And when you talk about final bills, it is the balance of 15 to 20% that will be paid after the completing verification of goods at the point of destination, because it can got delay, that's why. So, right answer is both are the correct statement about interim bill and the final bill. Okay, next. Next question is which of the following types of life insurance policies are not acceptable as security due to certain condition attached to them? Like which of the following life insurance policy is not cannot be used for the purpose of taking loan against them. है ना, like you cannot give them as a collateral, you cannot give them as a security. So first is saying children endowment policy, policies taken out specifically for purpose like estate duty. Then children deferred policy. Then we have policies with nomination under section 6 of the Married Women's Property Act and all. So what do you think? I guess right answer is all. All these are such kind of life insurance policy which you cannot give as a collateral. It cannot be used as a collateral by you. So the right answer will be E. Okay, right answer we have is E. Good morning everyone, welcome to the official YouTube channel of Office Adda 24/7. So first of all, let me know how are you all, and also first of all let me know is audio video both are okay, are we good to go? So as you know, we have started this Achiever series, and in this series we are discussing each and every unit in one particular day of your module A, then module B. After this we will complete C and then the D. So every day we are having one particular unit from your one unit, from your one module. So module A we have already completed. We are going for the module B, and if we talk about module B, this is the class number 6 of your module B. That's the most important questions we are talking about here. Okay, so if we talk about today's session, you can see today's topic is different modes of charging securities. That's your module B, class number 6. And if I talk about the overall unit number, that is the 26th unit number of yours. Okay, so let's start the session. Before moving towards the question, let's first understand what actually the different modes of charging security means. So first of all, securities are of certain types, and how they will be charged, when they will be charged, when it is allowed to have a mortgage, and what type of mortgage, this is what we have to study in this chapter. But before basic, I will give you idea here. The first of all, we have security is pledge. Pledge is what? It's a type of collateral, and in which the possession of your security will remain with the lender, and the ownership will remain with, obviously, with the borrower, until and unless the borrower have not paid the loan, have not repaid the loan to the lender. Till then its possession will remain with the bank, or I can say the lender. Like for example, I have taken a loan, and the example of pledge will be like a gold loan. If I am taking a gold loan, I have a jewelry or whatever I have of gold, I have to give that gold to the bank. It will remain with the bank until and unless I repay my loan amount. Okay, if I repaid that, bank will return my loan to me, my security to me, and the bank will get its money with interest. That's the pledge. So in the pledge, the possession remains with the lender. Second is hypothecation. In hypothecation, the possession and ownership both remains with the owner only. Owner means the borrower, I can say. So let's say, for example, car loan. If I'm taking a car loan, it's very obvious the car will be with me, and as well as the possession will be with me and ownership will be with me of the car. The only papers will be with the bank, but owner and possession will remain on the name of mine. And that's the hypothecation. Let's say if I am unable to repay the money to the bank, then the bank will take the possession and ownership of the car from me. That's the hypothecation. Then we have a mortgage. Mortgage is actually a type of collateral. It is immovable collateral. If we say immovable word, it means very obvious. It will always be a land. Okay, so when like a home loan, if you are taking a home loan, in that situation what happens? You will be having the possession of your house, but usually it remains with the borrower. Sometimes it can go with the lender as well. When? Because let's say, for example, if I talk about, I have taken a loan on my home, on my property. I'm not using that property. So what I can do? I can simply make sure that my property ownership remain with me, possession can go with the bank. I can give the property of mine on which I have taken loan on a rent to the bank. Like bank want to start its currency chest or the branch or something, and bank was looking for a location, so I can give my property to the bank to use. Okay, so that's what the mortgage is, and this is what we have to discuss in this particular chapter. So let's start with the questions. You will get more idea about the topic when we will practicing the question. So the first question is talking about, one second. The first question is talking about simple mortgage is created by A, B, C or D. Unwritten promise, an oral assent, an oral agreement, and instrument in writing. So when we talk about mortgage, you all know it's a immovable properties. But when it comes to types of mortgage, it covers first the simple mortgage. Those are simple mortgages created by what? And it will be created by an instrument in writing, not oral agreement, not oral assent, not unwritten promise. You have to write it down that you are giving your home or the property to the bank for the loan. So the right answer will be D option. Okay, right answer is D. That is your an instrument in writing. Second question is talking about hypothecation as an implied pledge in cases where implied pledge means the ownership will go with the lender. It means with the bank, but in hypothecation ownership remain with the customer. So in what case in the hypothecation ownership will go to the lender, it means to the bank. What is the case here? First is saying the delivery of goods is given. Second is saying constructive possession of obligation is given. Third is saying constructive possession of goods is given, and none of the above. And the right answer will be, in case of delivery of goods is given, no. The constructive possession, okay, of obligation is given. It's an obligation, not a right. It is not true. So constructive possession of goods is given. This is true. In this case, you can give possession of goods to the lender. So the right answer will be your C. So hypothecation can become implied pledge in the case where the constructive possession of goods is given to whom? To the lender. Okay, so right answer is C. Next question. Under the Companies Act 2013, a charge includes a dash. So Companies Act 2013, a charge includes a what? Mortgage, promissory note, bill of exchange, letter of credit. So under the Companies Act 2023, we are talking about a charge includes a what? It includes a mortgage. It includes what? Mortgage. Promissory note and bill of exchange, they are the negotiable instrument. And when it comes to the letter of credit is what? It is the secured mode of payment. Hana, it is what? It's a secured mode of payment. So right answer we have is A, that's mortgage. Now next question we have, the usual form of contract of agency is by way of a dash. The usual form of contract of agency is by way of a what? A power of attorney, guarantee bond, indemnity bond, none of the above. So which of the following is correct? So it's very obvious. The usual form of contract of agency is done by way of a power of attorney. In which way? In way of power of attorney it will be done. So right answer you have A. Clear? Indemnity bond is simply a bond that will be created when you do not want to take risk of someone else. Like for example, when the bank issue duplicate demand draft or duplicate fixed deposit receipt, in that situation, bank have to do what? Bank have to make sure that the customer sign the indemnity bond, so that in future if something loss happens, or let's say of the same what we can call duplicate draft of the same draft, if bank have to make the payment for two persons, because first one have come with the original document that have been misplaced or stolen by someone, and bank have made that payment. In that situation, bank and the other customer whose demand draft was actually it was. So in future the certain case of fraud can happen, and the bank have to make sure that those loss have not been bear by the bank, and that sense indemnity bond will be signed by the bank. So the usual form of contract of agency is by way of what? By way of power of attorney. Next, which of the following charges do not require registration with any authority? So which of the following charges that do not require registration with any authority? First is guarantee. Second is arising due to operation of law. Third, hundi, which is a negotiable instrument. So hundi is a negotiable instrument, but it is not defined under a Negotiable Instrument Act 1881. Negotiable instrument means a transferable instrument. You can transfer it. Okay. So which of the following charge do not require registration with any authority? And the answer is guarantee, arising due to operation of law, and hundi. Which of the following is correct? A, B, C or D? Only one, only two, only one and two, or all of the above? And your right answer will be all of the above, the D option. So the following charge do not require registration with what? With any authority. Right answer is D. Clear? Next. Which of the following is are merits of an equitable mortgage are? Which of the following is are merits of an equitable mortgage? First, the borrower saves the registration charges. It involves minimum formalities. Second, it takes less time, can be conveniently created. Third, it can be done without much publicity. Therefore, the customer's position is not exposed to public gaze. A, B, C or D? Which of the following is correct? So which of the following is our merits of an equitable mortgage? Benefits of an equitable mortgage. That's a type of mortgage. Okay. So first is saying borrower saves the registration charges. It involves minimum formalities. Second is saying it takes less time, can be conveniently created. It can be done without much publicity, and therefore the customer position is not exposed to the public gaze. And the right answer is all of the above. All of the above are the merits of having the equitable mortgage. Right answer is D. Okay, all of the above is correct. Next question. Next we have here the essential features of English mortgage. Again a type of mortgage. So mortgage, we have so many types in the mortgage. So the question is asking the essentials feature of an English mortgage. First is saying the mortgager binds himself personally to repay the mortgage money on a certain date in spite of the absolute transfer of property. So first we are talking about the mortgager binds himself personally to repay the mortgage money on a certain date and in spite of the absolute transfer of property. This is true. Okay. Second is saying there is an absolute transfer of property in favor of the mortgagee. Third, the transfer is subject to a condition that the mortgagee will retransfer it to the mortgager upon payment of the mortgage money. Then fourth, the mortgagee can sue the mortgager for the recovery of the money and can obtain a decree for sale. So which of the following is true? Only one, only three, all except two, or all of the above? So the essential features of English mortgage, again a type of a mortgage it is, and you can say actually the English mortgage binds himself personally, the mortgager binds himself personally to repay the mortgage money. Okay, on a certain that have been given to you, and in spite of the absolute transfer of property, you have to make the payment. Second is also true that there is absolute transfer of property in favor of the mortgagee, like you have to give the property transfer to the bank. Then the transfer is subject to condition that mortgagee will retransfer it to the mortgager upon payment of the mortgage money. So it's very obvious. If I have taken the loan from the bank, I have given the English mortgage to the bank. If I repay the loan on the time, bank have to return my property, the mortgage to me when I retransfer the money I have taken from the bank. So third is also true. Fourth is saying the mortgagee can sue the mortgager for recovery of the money and can obtain a decree for sale. This is also true. The bank can do what? The bank can do a case on me for the recovery of his loan. This is true. It means right answer will be A. All of the above. Right answer is what? It is A. All of the above. Next question. Next question we have, which of the following is our main feature of simple mortgage as follows? So which of the following is are the main features of a simple mortgage are as follows? First, the mortgagee has no power to sell the property without the intervention of the court. Okay, the mortgagee has what? No power to sell the property without the intervention of the court. Second is saying the mortgagee means bank we are talking about, mortgager means the person who have taken the loan. So mortgagee is not put in possession of the property. Registration is mandatory if the principal amount secured is 100 and above. The mortgagee has no right to get the payment out of the rents and proceed of the mortgaged property. So which of the following is the feature of your simple mortgage? And all are the feature of your simple mortgage. It means all of the above. All are correct. Okay, all are correct here. So right answer will be D. Next. Which of the following is our correct about, correct about difference between pledge and hypothecation. So I have told you the difference that in the pledge the possession will remains with the borrower, with the lender, and in hypothecation possession remains with the borrower. Okay, so what is the difference between the two? Let's see. First is saying a pledge is a contract between the borrower or party, individual that owes funds or service, and the lender. That's true. Okay, party or entity to which the fund or service are owned. Now where the borrower offers an asset, that pledges as an asset as a security to the lender. Okay. Second is saying the lender will have a legal possession. Okay, what we are saying that the lender will have a legal possession of the pledged asset and the lender has the right to sell the asset in the event that the borrower is unable to meet his loan obligations. And this is true. Okay, so both the statements are true about the pledge here. So right answer will be C option. Both the statements are true. So the right answer will be your C option about the pledge. Both are true. Now next question is here. The pawnee can sell the goods if the pawner fails to pay. And is it true? So it means a bank, like bank can sell the goods if the customer fails to make the repayment of the loan. So is it true that the bank can sell the goods? Yes, it is true. So the right answer will be B. The right answer will be your B option. The statement is true. So such true and false type of questions can be seen in your paper, and when this true and false type of questions are seen, this is for 0.5 marks, not more than that. Okay, true and false questions can be there, and if these kind of questions are there, then it will be only for the 0.5 marks. And this is the pledge we are talking about. Hana, like in the pledge the goods can be sold by the bank if you have not repaid the bank the amount. So right answer is your pledge. Sorry, true. That is B.
Hello everyone, welcome to Officer Adda 24/7. आप सभी लोगों का a very good evening to all of you, right? And today I'm going to take your class, right, for PPB. Okay, so in PPB I'll take module A and module D, right? Both the modules like module A and module D I'm going to take. Fine. So from module A, right, in my last classes I have completed banker customer relationship, right? We have done the banker customer relationship, and in that class I have explained you what is the banker customer relationship. That is a chapter 1 of the module A, right? Now this is your chapter 2, right? We have here chapter 2, that is KYC and AML guideline. Fine, KYC and AML guideline. So this we are going to take here. Fine. Now what is a KYC? First I'll explain you what is a KYC, what is a AML, because the chapter 2 is very important, right? For exam point of view, the chapter is very important, right? Because in this actually what we are doing is ठीक है. So what is the KYC? What is the KYC and what is the AML? Right? See, KYC is basically, that is the know your customer or know your client. Right? That means to verify your customer identity, where they are living, who all are your customer, what is their identity. ठीक है. So exactly it is all about to know about the customer. Right? And we have the three component of KYC. Now what is the three component of KYC? That is, the number one is customer identification program. Right? Second is customer due diligence, and the third is enhanced due diligence. As you know that in bank we have the three risk categories. Right? We can remember like this, it is 2, 8 and 10. Right? So periodically we have to update their KYCs. For 2 it is low risk customer, for 8 it is medium risk, and for 2 it is high risk, then medium and then low. So when we have the low risk customer, like normal salary people we have, so for them we have to do the KYC on a periodical basis. Periodical is what? In every 10 years we have to update their KYC. Now for the medium customer we have to update their KYC within 8 years. Okay? After 8 years on a periodical basis we have to update their KYC. And for the high risk customer, who are the high risk customer? The high risk customer are those customer who all are the like diamond, right, merchant, businessman, they all are the high risk customer. So now what we are doing is we have to update their KYC in every 2 years, right? So in this chapter what we are going to learn? We are going to learn, right, even in the paid batch also we are going to learn money laundering, we are going to learn financing of terrorism, we are going to learn KYC policy and its element, right? We are going to learn prevention of money laundering act. Okay, right? So in this chapter what we are going to understand? We are going to understand money laundering, right? We are going to understand how the banking units, right, they will be utilized in the money laundering services. Okay, so basically what we are doing here is okay. So what we are doing in this chapter is, that is what is the money laundering, right? What is the FATF? Okay. Now what is the FATF? Then what is the stages of money laundering? That we are going to learn in this chapter. Then what is the stages of terrorism? What is the AML framework which we are using in the India? Okay. And what is the money laundering? How we can prevent that money laundering, right? Then after that, who is the customer exactly? So in know your customer, we will identify who is our customer, who is our client. Client is basically whom? Who is engaged in the financial transaction or activity. Okay? So with the bank, whosoever is the client is, that is the person who is engaged in the financial transaction or the activity. That is our customer and that is our client. Okay? So for customer, actually the definition is given in the 2016 by the RBI in their master circular. Now what is that master circular is, they have given the definition of customer. Who is the customer? That is the person who is carrying out their function, who is acting, okay, who is having the transaction with the bank, who is continuing their relationship with the bank. That is the customer. Okay? So on a periodically basis, when we have to maintain that relationship, of course we have to, right? Okay? So that okay? So that actually what? That is the customer definition, KYC norms. Okay? So that we are going to learn in this chapter. Okay? Then again, what is the organization setup for AML? Now what is the organization setup for AML? We have the designated director. ठीक है, अकॉर्डिंग टू द पीएमएल रूल एंड वी हैव द प्रिंसिपल ऑफिसर ऑल्सो, ठीक है. सो अकॉर्डिंग टू द ऑर्गेनाइजेशनल सेटअप फॉर एएमएल वी हैव द डेजिग्नेटेड डायरेक्टर, वी हैव द प्रिंसिपल ऑफिसर एज वेल. नाउ हु इज द डेजिग्नेटेड डायरेक्टर, ठीक है. डेजिग्नेटेड डायरेक्टर इज बेसिकली द मैनेजिंग डायरेक्टर ऑफ द बैंक, द होल टाइम डायरेक्टर, मैनेजिंग पार्टनर दैट इज, ठीक है. नाउ we have the another person that is a designated director also. So in this chapter we are going to learn so many things, ठीक है. Now we have the three component of KYC are what, that is CIP, customer due diligence, enhanced due diligence, ठीक है. So that is the 1 2 3 KYC and AML. Now what is the KYC, right? What is the know your customer, ठीक है. Right. So here basically what is the KYC, that is know your customer, right. Now in know your customer basically the bank have to obtain the information about the identity and address of the customer, right. Now what is the KYC, that is know your client or know your customer. In know your customer you have to identify, right, the identity, you have to identify the address also of the customer. So what is the KYC? KYC is the process by which bank obtain the information about the identity and address of the customer, right. And this process help to ensure that bank service are not misused, ठीक है. The KYC procedure is to be completed by the bank while opening the account, right. So similarly we have to update their KYC. ठीक है. So that is the KYC. Now we have the money laundering stages as well. We have the 3 stages in the money laundering, that is placement, right, layering and integration, ठीक है. Placement, layering and integration. First I'll just give you the brief introduction, what is the KYC, what is the money laundering, right, so that at least you will have some idea that what is the money laundering, what is the KYC, what is the placement, ठीक है. Right. So see in this actually the placement, layering, what is the placement basically, see the placement is the first stage of money laundering, just place the money, ठीक है. Because what is the money laundering actually is, the money laundering is to convert the black money into the white money, ठीक है ना. What is the money laundering? When we are converting black money into the white, that is called the money laundering. Now we have the placement process, right. Placement is what, that is just the first stage of money laundering, right, just first stage, right. So in money laundering what we have to do in the first stage, in the placement, we have to inject that money into the financial system, right. So now what is the placement, you can change of currency, you can change the denomination, all these comes under the placement. Now what is the layering? Layering is basically, ठीक है, layering is what, layering is the structuring phase, right. Here we actually divide money into the small transaction, small transaction. Okay? Then the last part of the money laundering is the integration. We can call it as a extraction also. In your book it is integration, but we can call it as a extraction also. So what is the integration is exactly? Integration or extraction is finally now the money is converted into the white money, right? Now we have to make use of that money by purchasing the property, maybe by purchasing the jewelry or maybe anything. Okay? So now we have white money we have. Okay? We have done placement, we have done layering, we have done integration. Now integration, we have to use that black money into the different type of practices like purchasing the property or maybe anything. Okay? So it is called the money laundering process. This is a money laundering. Okay? Now this is your cash transaction report, cross border wide report, NTR and CCR. Basically these are the 4 reports we have in the money laundering, right? If any cash transaction which is 10 lakh or above, okay, or any series of cash transaction in a month, okay, to other, right? So this is we have to report in the CTR. Cross border, if we have the transfer of more than 5 lakh or equivalent, okay, then we have to transfer that fund. We have the NTR, non-profit organization, received by non-profit organization of more than 10 lakh, we have to report. Counterfeit, we have to report. Okay. Now what is the first question is? Now we will have some question here. Okay. Now what is the question? What is the objective of KYC? KYC is, that is a know your customer. And what is the objective of KYC is? The option 1 is to ensure appropriate customer identification. Second is to monitor transaction of suspicious nature. C is to ensure that customer would not deceive the bank. To ensure if loan is given, it would not become a NPA. Only A and B. Okay. So now what is the right answer exactly is? Tell me what is the right answer? Okay. What is the right answer here? Tell me. Right. So this chapter is actually AML and KYC is very important. Okay. We have here the answer is, that is E. A and B both are correct. We have to do the customer identification as well. We have to monitor the transaction also, right, which is of the suspicious nature. Okay. We have to identify the customer identity, and because of that money laundering we have to monitor all the transaction. Okay. So right answer is, that is A and B. Second is bank appoint whom is responsible for submission of report to FIUIND. There is a unit of ED, right? Enforcement Director. There is a unit actually in the financial department, FIUIND, that is. Okay? Financial Intelligence Unit, right? We have to report all the transaction, all the suspicious transaction to the FIUIND. Now who will report? Designated Director, Company Secretary, Principal Officer or Compliance Officer. See, in the money laundering in bank you have the 2 type of person. That is, one is Designated Director like CMD or anyone, or the another one is Principal Officer. Now tell me who will be responsible for submission the report to the Financial Intelligence Unit. Who will be responsible? Tell me. Is it Designated Director, right? Is it Company Secretary? Is it Principal Officer? Or is it Compliance Officer? Who is the, right? So here we have the 2 type of person, right, in the money laundering reporting. One is Designated Director and the another one is the Principal Officer. I have already told you, okay, I have already told you that what is the reason of that, right? What is the money laundering process? See, in the money laundering, we have the 2 type of, okay, Designated Director and the Principal Officer. Okay. Now, who is the Designated Director? Designated Director is basically who will take care of, who will be managing director actually. ठीक है. Now what is his responsibility? He will ensure the process of KYC and AML. He will ensure the policy duly updated. ठीक है. He will ensure that all the level at the staff they will be skill level, right? And the last one, now we have the principal officer. Now who is the principal officer? The bank must designate a senior officer as principal officer in terms of PMLA. ठीक है. Now what is the main function of principal officer? They have to do the monitoring, ठीक है, of the KYC ML policy, whether the KYC policy is implementing properly or not. They have to report all the transaction. They have to maintain the licensing with all the law enforcement agency like ED and CBI and all. They have to ensure about the submission of periodical report to the top management. They have to keep the AML monitoring system uploaded, right? So here the right answer is what? Yes, that is principal officer. C is the right answer. Of course, Muzeem ur Rahman, you are correct. Okay, you have given the right answer. So that is principal officer actually. Now the third question is, customer are typically characterized in the what risk category? I have already explained you. 4, is it 3, is it 2, is it 5? What all are the categories are there, right, for the customer? In the bank, we have the 3 categories. Even I have worked actually in the vigilance department in Bank of India. And by just remembering that name, FIUIND, actually there is a close licensing between the vigilance officer and all the CBI enforcement like ED and all the CBI agencies. Vigilance department, they have the licensing definitely, right? So all the like files and all we have to check. So what is the customer typically categorized in the risk category? Is it 4, is it 3, is it 2, or is it 5? Okay, so FIUIND is actually very typical unit of right, ED, and it is actually very tough. So what is the right answer here is, that is 3 categories. I have already told you that is a low, medium and high. Okay, we can remember it as a 2, 8 and 10. So every 2 years you have to periodically update the KYC for the high risk customer like bullion dealer, diamond merchant. Okay, medium is what? You have to update their KYC periodically for every 8 years. For low risk customer, you have to update like normal salary people. They are the low risk customer like we, right? We all are the like low risk customer actually. So in every 10 years you have to update their KYC. Okay, so this is 10 years, right? So the right answer here is, that is 3. The next question is, director of FIU India can take action against what? For violation of Prevention of Money Laundering Act obligation, the bank, employee, principal officer, or all of the above. What is the right answer now? Right? So what is the right answer here is? The right answer is all of the above. Of course, the director, he is like a right, he is like a head of that department. So he is very, very, much effective. So of course, the right answer is what? That is all of the above. That is the right answer. Then last question is, non-profit organization transaction report pertain to what? In account of all the non-profit organization. Cash transaction, all transaction, cash received above a threshold value. All the non-profit transaction report, they have to submit that report to the upper higher authorities. Now what kind of report it is? That is a receipt above a threshold value. I think it is 5 lakh or 10 lakh something. 5 lakh it is.
Good morning everyone, welcome to the official YouTube channel of Officer Study 24/7. So first of all, let me know how are you all, and also let me know is audio video both are okay, are we good to go? So as you all know that we have started the series of PPB, that's the Achiever series, and the same series is going on for IE IFS subject as well. So in every session we are discussing one particular unit of your particular module. As you know, the 4 modules are there, and then we will be practicing the most important question on the same. And this is what we are going to do today as well. But today is something special. Special is because we are going to complete our module B. So we have done module A classes, and we have also done the module B classes here. So PPB module B classes have also been completed. So today it will be the last class of module B, and from Monday onwards, from Monday onwards we will be having the module C classes. Okay, we will be having what? We will be having the module C classes. So if you haven't seen till now the earlier session of module A and B, then do make sure you check them out. And then from Monday, we are going to start our preparation for the module C as well. Okay, so as you know, module A and B had the biggest syllabus in in the PPB subject. Module A and B have 60% syllabus of you, and the C and D have a very small syllabus, not comparative to the A and B. Okay, so we will be starting module C from Monday, and those who are joining this session on first time, I would love to inform you all that this session is going on for the JAIIB May 2024 paper of your JAIIB. In all the 4 subjects, sessions are going on. Paper 1 is your IEIFS. Its session is going on in the evening at 7 p.m. and the second paper is your PPB. That session is going on in the morning, that is 6 a.m. It means we start our day from the PPB session. And to join these sessions regularly, you have to subscribe the channel and then press the bell icon so that all the upcoming sessions notification be given to you. And I will be your mentor for PPB as well as IEIFS subject for May 2024. Okay, so let's start the session. The first question we are talking about here is about the Stamp Act. You can see here, as per the Stamp Act, a document executed in India shall be stamped dash. Shall be stamped dash. First, only before execution. Second, at any time but before filing suit. Third, within 30 days after execution, before or at the time of execution. So when this is stamped should be done. So as per the Stamp Act, a document executed in India shall be stamped at what time? Before execution, at the time but before filing, within 30 days after execution, before or at the time of execution. So you have to stamp the document before or at the time of execution. Okay, so your right answer will be D. Right answer will be D. So your document have to be stamped before the execution or at the time of execution. Out of these, you can simply stamp the document. Second question is about NPA. So when it comes to the NPA, NPA stand for what? It stands for non-performing asset. NPA stand for non-performing asset. So what is the meaning of asset? Actually, assets in context to the bank is the loan and advances bank is giving to the customer. So the loan and advances bank giving to the other customers or to the customer, that is known as your assets. And assets are of two types. First is a standard asset. Second, we have non-performing asset. So standard asset is the asset where you can say that this is the asset which regularly the customer is paying interest or principal. Okay, so the standard asset is a type of asset when the regular payment is coming from the side of the customer, and the non-performing asset is a type of asset on which customer stop making the payment. Okay, non-performing asset is what? It is simply a type of asset which customers stop making payment on. It means the principal and interest on a loan is not coming for a particular period of time, then it will be known as your NPA. Okay, and that particular period of time will be 90 days in all cases, but not in agriculture. In agriculture, it will be 2 harvest season. Okay, so let's see the question here, options here. Interest and or loan installment overdue for more than 90 days. Account is out of order in case of overdraft cash credit. Bill remains overdue for more than 90 days in BP and BD. All of the above, only A and C. So which of the following is correct? So I have told you in all cases, it will be 90 days. Only in agricultural case, it will be your 2 harvest season. So your right answer will be here, all of the above. The right answer is D. That is all of the above. Clear? Next question. Next we have, to whom shall the provision of IBC 2016 apply? What is IBC? It is Insolvency and Bankruptcy Code. Okay, IBC stand for what? It stand for Insolvency and Bankruptcy Code. So on whom the IBC can be applied? So why IBC was introduced? So we have the certain recovery laws for the NPA, like DRT, DRAT, SARFASI, ARC is there, NCLT, NCALT is there. So these all are the recovery of NPA's laws and legislation. And the IBC after that was introduced in 2016 because these methods used to take a lot of time to recover the loan for a bank. And that's why IBC was introduced, and IBC is applicable to whom? First, corporate. Second, other limited liability entity. Third, personal guarantee to corporate debtors, individual and partnership firm. So the Insolvency and Bankruptcy Code is applicable, or its provisions are applicable to all of them. So right answer will be your D. All of them, it means right answer will be your D option. Okay. Next question. Next we have here, a person promising to save another from loss is called dash. Like if someone is promising that if you have to face loss on this situation, then I make promise to you, I will make that loss good for you. Okay, so making the loss good for someone is the function, is that function on that relationship is known as indemnified function or indemnifier function. So the person who is promising to make something to make bad something good is the person who is the indemnifier. Okay, right answer will be B. It's the indemnifier. So in the insurance policy, this happens. Now, like if I'm taking insurance, I have taken insurance of my laptop. So the LIC, sorry, not the LIC, the insurance company is telling me that if something wrong happened to your laptop, something loss you are facing, that we will make good for you. It do not apply in case of life insurance because it's very obvious. You cannot make something good out of the death of a person. So in the life insurance, it is not applicable. Otherwise, it is applicable everywhere. So right answer is indemnifier, who is promising to make loss the good. Okay, right answer is B. Next question. In bank guarantee, the bank makes payments on dash. So bank guarantee is what? It's a fee based income for a bank. It's a non-credit fund based category. It's a non-credit based fund facility, I can say, in which bank is actually not giving money to someone as a loan, but taking guarantee for on behalf of someone. So first is saying being convinced that the beneficiary has incurred loss. Second, being sued by the beneficiary. Third, the guarantee being invoked after seeking concurrence of the debtor. Fourth is saying merely on demand by the beneficiary. So what do you think? In which case bank guarantees, the bank makes payment? In the bank guarantee, bank makes payment in which of the following cases? Which of the following is correct here? And the right, obviously, on the demand of the beneficiary, it means D. Merely on the demand of the beneficiary. So bank guarantee becomes active when some party defaults only. When the party defaults, then only your bank guarantee will become the active. So right answer is D here. Next question. The LC issuing bank is also called as dash. Now what is LC? LC is also non-fund based credit facility. LC is also what? It is also a non-fund based credit facility. It means it's a letter of credit. Letter of credit is a secured mode of payment in international market, because we know there are exporter and importer. They do not know each other, but they also do not have any option. They have to trade with each other when they do not know each other. So if they do not know each other personally, they are not able to trust each other for the funding or the goods and services. And that's where the LC was introduced. Now letter of credit will be a secured mode of payment for all the economic transactions, for all the international trade transactions. Okay, so first is saying the LC issuing bank is also called as what? The importer's bank or the opening bank, the advising bank or the confirming bank, the negotiating bank or the nominated bank, and the D, the reimbursement bank. And the right answer will be A, because On the order of importer, banks make the letter of credit on the name of the exporter. Hana, so on behalf of the importer, banks make the LC, so it will be a importer's bank or the opening bank. So right answer will be your A. Okay, right answer we have is A. Next question. Which of the following statement is false? You have to find out the false statement here. First is saying in a deferred payment guarantee, the guarantee is to ensure delivery of goods. Second, a deferred payment guarantee is mostly based on primary contract between the buyer and seller. Third, the deferred payment guarantee differs from other kinds of guarantee issued by bank as regards payment liability of the bank on invocation. Fourth, in deferred payment guarantee, the bank liability comes into existence only if all the installments are not paid and not on the non-payment of any one installment by a customer. Now you have to answer which of the following statement is false. Question is asking the false statement. A, B, C or D. A is saying 1, 2, 3. B is saying second 3. C is saying first, second, fourth. D is saying all of the statement are false. And the false statement we have here is first, second and fourth. The third one is correct. The third one is correct. But the first, second and fourth, they are the false statement. Okay, they are what? They are the false statement. So the right answer will be your C here. Right answer is what? It is C. Next question. Next we have ownership of goods can be transferred by endorsement and delivery of dash. So the ownership of goods you are transferring, it can be transferred by doing endorsement. Endorsements mean transfer. And the delivery of what? Right of money, obligation to pay, document of the title goods, document of title to immovable property. So when it talking about the ownership of goods, it cannot be true now. Okay. So ownership of goods can be transferred by endorsement and delivery of what? Immovable property is definitely a not answer or the wrong answer. So not the right to money, not the obligation to pay, but the document of the title to goods. The document you have which contains the title of the goods, that you have to endorse, that you have to transfer, that you have to deliver. Okay, so simply the ownership of goods can be transferred by what? By the endorsement and the delivery of your document of title to goods. Okay, so right answer will be your C. Next question. When banks give home loans, the nature of charge created is dash. So when the bank is giving home loan, the nature of charge created is hypothecation, mortgage, assignment or pledge. I think this is the simplest question. This is what? This is the simplest question because you're talking about home loan. So the nature of charge created will always be mortgage because the immovable property will always be the mortgage. So the right answer will be your B. Right answer we have is B. Okay. Next we have the the scheduled commercial banks are expected to enlarge credit to the priority sector and ensure the priority sector advances constitute debts. So the scheduled commercial banks, they are what? They are expected to enlarge credit to the priority sector and ensure that the priority sector advance constitute what? 18% of ANBC, 40% of ANBC, 12% of ANBC, 25% of ANBC. So we are talking about scheduled commercial bank total limit to give to the PSF, and that's the 40% of ANBC or the CEOBE, whichever is higher. So the right answer will be here B. That is 40%. The total loan scheduled commercial banks have to give under the priority sector lending is your 40%. Out of that, 18 will go to the agriculture. Out of 18, 10 will go to the small and marginal farmer. Out of 40, 12 will go to the weaker section. Out of 40, 7.5 will go to the weaker micro enterprises. Okay, so this is the whole target and sub-target of scheduled commercial bank. So right answer here will be B. Okay, so the next So this is the total question we have discussed about your module B for the other different unit. 36th unit, 35th unit we have discussed, 27, 28th unit we have discussed in this session. So why I have not come up with the particular name of a unit, because I have merged the question from the different unit, because this is the last session of your module B. So if we talk about the module B of PPB is very huge but less comparison to the A. So we have completed your module B of PPB, in which we have discussed each and every unit, 1 or 2 questions from each unit we have discussed here. And then apart from that, from Monday onwards we will be starting the module number C. So do make sure till then, before Monday, you will complete your module A classes and module B classes. That is very important, because module A and B is actually taking time. Hana, in the YT sessions we have done 1 or 2 units in a one session only, but when it comes to the topic wise study, you have to study in very detail. And when it comes to the very detail, it means each and every word have to be studied. That's kind of practice, or that's kind of a study of the topic is required, because in the PPB you will find maximum questions will be case study, and the case study questions will be solved by the 3 things. First, the knowledge of the topic, it means the theory should be understood. Second, the laws, reforms, norms or regulation or act or section, and the third, your decision making power. So these 3 things have to be known. Like first, if I'm talking about the check, you should know what is check, how it works, etc. The procedure you should know, and everything about the check you should know. Second, you should know in which section of Negotiable Instrument Act the check is defined and what that section is saying about the check. And the third thing you have to know is your decision making power. Like if this situation creates in front of you in the bank, what will be your action at that time? That is your decision making power, which is required to answer such kind of questions. So the maximum questions in October 2023 have been seen from the case study only in the PPB. So do make sure focus accordingly on the content, because you have to answer the decision making questions. Okay, so this is all for today. Now, one information for all of you, if you are still looking for a dedicated batch from where you can complete your detailed study of PPB, for that you can see the resolution batch is starting. And in this batch, I will be starting the PPB from 10th of January. So from 10th of January, this is starting. And how to enroll? To enroll, so first of all, you have to go to the Adda 24/7 application, download the application, then go to the home page, select your exam category, that will be JIB, and CIB is your exam category. Then go to the JIB May 2024, click on the view all option, you will find all the batches here. Okay, so you can see this is the resolution batch starting from 10th of January. So click on the batch, do check the offering. If you scroll down this page, you will find what this package includes. Okay, so this package includes all these things, and after that you will find the study plan. When you click here, you will find the study plan of PPB starting from 10th of January. Time will be 8 to 9 p.m. We are starting from module A, because module A have a huge syllabus, and the huge syllabus we have to cover first, so that you will get more time to revise this content. Okay, so we are starting from the module A, and this is your study plan, you can see here. Okay, now apart from checking all these things, you have to click on the buy now option to enroll. If you use this code, you will get only 77% discount. So instead, you can use a code Y496, which give you 78% discount. So 1% additional discount will be available if you purchase from the application. So you will get 78% discount, 6 months validity, and the batch is starting 10th of January. I will be starting PPB 8 to 9 p.m. Okay, and this is the process how to enroll in any batch you want to. Okay, if you want a dedicated individual subject batch, that is also available. If you want to go with the Mahapacks, that is also available. Process will be same for all. Okay, for all batches and all whatever you want. Clear? And if you want to join YT sessions on the regular basis, like you want YouTube sessions to be joined, like you are doing self-study by yourself, but you only want to practice the basic question and the advanced question, and you only want to join YouTube sessions. For that, you have to subscribe the channel Officers at 24/7 and press the bell icon, so that all the upcoming sessions notification will be given to you. So this is how you can join the YouTube session. For PPB at 6 a.m. you have to meet on Officers at 24/7, and for IEIFS at 7 p.m. So these are the 2 important timings for your sessions. So do make sure you check the playlist if you haven't seen the earlier session. And if you have any doubt, you can ask in the comment section. And that's all for today. Thank you all for joining the session. And do remember the resolution batch is starting from the 10th of January. Okay. Take care, everyone. Have a good day. See you in the evening at 7 p.m. for IEIP subject. Take care, everyone.